Fantastic. Well, again, thank you all. For those of you who I have not met, my name is Katie Magoon, and I am the owner of People Solutions Center. We are thrilled to be here and to have the opportunity to share this information with you, sort of hot off the presses, but more importantly, talk about not just what got announced, because that's too easy, right? But more importantly, how does this apply to your business every day? And where do you go from here in terms of really understanding the implications of this? We have folks on today's call from all sorts of different industries. So feel free as we go through to drop comments in the chat. I will ask our questions along the way. I will answer those as we go. And then also we'll leave time at the end for some of that. But we intentionally built in some opportunities today with some scenarios and examples to help you understand for your industry, what are some of those things that you may want to watch out for, and some of those pieces that will be particularly important in terms of navigating these changes. To give a little bit of background before we dive into the details of the changes, one of the things that I want to be clear on is, so what got announced last week is the actual, the new proposed law under Fair Labor Standards Act. It has been through the entire vetting process with the Department of Labor. It is technically final. Now, there is always a possibility that somebody will challenge this prior to the effective dates, and that could slow the progress. However, given that this has already been slowed for a full 2 years, we feel pretty positive that this is likely to move forward in some fashion, and the work that you need to do to be prepared is super important and may take you some planning. And so doing this, getting this information to you now, understanding the implications, even if something got slightly delayed, worst case scenario, you will be set and ready to go. And there are certainly, from what we've seen so far, indications that they do expect that this will move forward within the timeline that's been outlined so far. So just a little caveat on that end. In addition to talking about the Fair Labor Standards Act, one of the things that also got announced yesterday was a potential change to non-compete agreements. And so in response to emails about the FLSA law, we have gotten some folks who have asked some questions about what's happening with that non-compete agreement piece. I will answer that question at the end to give you a sense of what did we hear last week and what impact do we think it might have. There is a strong indication that one is far more likely to get challenged and take longer before it actually gets implemented. And so we feel like it's a little premature to do an entire webinar on those impacts, but I'll at least give everybody a heads up of what is happening and what you're looking for along the way. So again, don't hesitate to use the chat as we go along, drop in your questions, and I'll be happy to answer those to the best of our ability based on what we know today. So let me go ahead and get us started by sharing sharing the screen with you. I think you should be good to go. Let's dive right into the conversation. And I always love to start, right? Any sort of conversation we're going to start, let's gauge where our audience is today. So I'm going to do a quick round of polls. If you are in a safe place and can participate in the poll, please do. It is not required if you cannot do so safely, but get a sense of where everybody is at now. So this is a true or false poll that I'm going to put up here. And the question is, even when the FLSA rule changes, if I'm paying someone a salary of more than $59,000, does that mean I don't need to worry about overtime? So true or false, I did give you the it depends option. For those of you who don't like true or false, you have some flexibility. But if you think about in the future, by January 1st of 2024, if you paid someone over $59,000, do you get to walk away from today going, whoo, nothing I need to do? Let's see where we're at. All right, we're split across the board. There's still a couple more answers coming in. I'll give folks a moment. Like seeing as much of the responses as I did. Great outcomes, and I think folks have some good understanding to start with. So let me go ahead and wrap that up, and I'll actually show you those results so you can get a sense as to where others were at. We have a couple of folks that said true. We have a good chunk of folks, the majority of our folks said false, and there's a few that said it depends. Some of you probably because you just know whenever we ask these, we're always going to say it depends. One of the things that we're going to talk about today is this very issue, and the right answer in this case is very much it depends. There is more to Fair Labor Standards Act than simply the salary test, but it's the one that people know the most. And so we tend to go, oh, as long as salary is good. What we find when we do FLSA audits for clients and help in FLSA compliance is oftentimes you may not be necessarily applying the job duties test correctly to the roles you have today. So if you have appropriately applied your job duties test and your person makes more than $59,000, the answer is very much you don't have anything else you need to do. However, in many cases, we find you may not be applying job duties test correctly. So we need to make sure that you get that right before you just assume there's nothing else you need to do. Let's go with our second true-false question. In this case, we're going with someone with a manager title making $60,000 a year will not be impacted by this change and will not need to be somebody that gets paid overtime. Of course, my polling is having trouble. Hold on just a second. I'm having a polling issue for some reason. All right. I'm going to, since I'm having a technology problem on my poll, I'll have to figure that out on the back end. So the question to this one is also, I'll just go ahead and give you the answer. The question on this, the answer to this one is also, it depends. And this is, again, a job duties test piece. We often find that individuals label somebody a manager, but they don't actually meet the requirements to be exempt as a manager or under the executive job duties test. And so be careful as you are going forward and applying your FLSA status information to make sure that you're not just looking at the salary threshold. Now, the good news is if you're thinking, Katie, I am scratching my head because I'm already super confused, don't worry. We are going to start this webinar by going through in detail what exactly is the Fair Labor Standards Act today, what's changing, how do you address what's changing, but also how do you make sure that you were actually in compliance to start? And that's one of the reasons that even though, right, if something got delayed with the rollout, which again, we don't anticipate, but if it did, you're still better off to go through this process today because it is not at all uncommon that companies have FLSA statusing incorrect even under today's threshold. It's just that the new threshold increases the chances that that is likely the case. So let's dive in and go directly to let's go through the Fair Labor Standards Act and make sure we all even understand what is it we're talking about to start with. So the Fair Labor Standards Act, often called the FLSA, is really the law that governs overtime pay requirements. So when do you need to pay somebody overtime? It also is the minimum wage requirements at the federal level. Now, in both cases, you may have state laws that further impact your overtime requirements and your minimum wage laws. So, for example, if we have folks on that are from California, you've got a whole different set of, as most things do in California, you've got your own set of laws that are actually a higher standard than the federal standard. So for California folks, this shouldn't, as long as you are current and accurate under California law, these changes should not necessarily make an impact on you unless California goes and adjusts theirs as well, which could very well happen. But the Fair Labor Standards Act covers overtime pay, minimum wages, child labor laws, and the record keeping regarding your time tracking around overtime pay, which becomes a really key important part of your HR practices, particularly as we start moving forward with these changes. And so we're going to talk about the implications. We're going to spend most of our time today on this overtime pay piece because it is the piece, A, that is changing, and B, is the most confusing for the most folks. Again, we often find that even under today's laws, when we ask the question, what percentage of your employees are exempt versus non-exempt, we get a lot of looks like, what are you talking about? Or we get answers of, oh, Katie, we just pay everybody's salary, so it doesn't matter. Or I get folks who answer that of, do you mean hourly or hourly and salary, which isn't necessarily the same as exempt and non-exempt. And so we find that this is one of the most confusing laws in labor law, which is why today's conversation is so important. And we're going to start by walking you through what does exempt and non-exempt actually mean, because the words can be confusing for folks. So here's how it works. Under the Fair Labor Standards Act, every employee is actually eligible for overtime. If you think of it in the broadest terms, the Fair Labor Standards Act says employees are eligible for overtime pay. Everybody is, with the exception of these groups of jobs that qualify under 3 key criteria. And those 3 criteria today are a salary threshold of you have to make at more than $35,568,000 a year. You have to meet the second criteria, which is a job duties test, which is that makes you an exempt category. And then the third one is you have to be paid salary versus hourly. And it's this third one that oftentimes people will hang their hat on, right? They immediately go, oh, I pay them a salary, so I don't have to worry about overtime. And they think they're done, and you're not. There's so much more to FLSA. It's actually prong 1 and prong 2 of this 3-prong test that are the more complicated items to understand. So we start with, do I pay them a salary? Yes, you're 1/3 of the way there. Then we ask the question of, are they above the salary threshold, which up until now and up until July 1st is still $35,568. I still get people to go, check, check, we're done. It's this third piece, which is the job duties test, that is the most difficult to apply and the most critical to getting this right. And so today we're going to spend time on the threshold change, but I'm also going to walk you through what this job duties test means, because it's where most companies make mistakes when they have mistakes in their FLSA compliance today. All right, so hopefully we're starting to square things away, but let me bear down and give you a little bit more information on what this means. So individuals that qualify as exempt, if we think about the way FLSA stands, right? FLSA says everybody gets paid overtime unless you meet these 3 criteria. The people that meet those 3 criteria are then exempt from overtime. And that's where the word comes from. So individuals that are exempt means that they meet all 3 of the 3-prong tests. Overtime, therefore, is not required, and you can simply pay them their base salary. Those individuals then that are not exempt, meaning the original law applies to them, typically what happens, the reason that they're not exempt is there's at least one of those 3-pronged parts of the test that don't apply to them. In which case then you have to pay overtime, and you have to pay overtime for anything over 40 hours a week. Again, some of you may have state laws that require additional rules around overtime, but for today's purpose, we're talking about at the federal law level, what you're required to do. So that is the difference between exempt and non-exempt. Easiest way to remember it, non-exempt, got to pay overtime. Exempt, you're not required to. So how does this all break down in terms of the changes today? If we go back to the original slide of your 3-prong test, right? You've got the salary over $35,568. This is actually the piece that they announced last week is changing. And the reason that it's changing, if I give you a little bit of a history lesson, this changed a few years ago. For many, many years, this salary test was as low as about $20,000 a year. It was kind of a non-important part of the test, to be honest, because most people made more than that anyway, because the market required you pay people that in order to be able to hire anybody in the first place. So a few years ago, they jumped that number to $35,568. This new rule jumps that number again, one jump on July 1st and a second jump on January 1st. And then the new threshold will change every 3 years going forward. So no longer will this be a let's wait until the Department of Labor makes the decision and goes through all the comments and the feedback and so forth. This will now be written into law that this number will be updated every 3 years to reflect increases in salaries and labor market changes. So it's one you're going to need to keep an eye on for a long time. So what are the new numbers? First and foremost, on July 1st, there's a small shift July 1st, and they did this intentionally to keep it from being just a one lump sum, very quick impact on companies' budgets. So as of July 1st, in order to meet the salary, that first of the 3 prongs test, your individuals will need to make more than $43,888 per year. That equates out to $844 a week for those of you who do a weekly payroll. The second jump comes January 1st, and this is the one that we feel like is likely to make an even bigger impact for people because it is a much higher number. And that new number as of January 1st will be $58,656. Make it easy on yourself. Go with 44 and 59,000 and you won't ever have to worry about it because all of the numbers in between are going to be so small. The interesting part about this change, many companies are going like, gulp, that's a big jump to not have to pay somebody overtime. And you're right, it is a big jump. That being said, what we find often is if somebody isn't, based on what we're seeing today in external market salaries, if somebody is not making at least $58,000 a year today, there's a pretty good chance that you've had them misqualified under the job duties tests until now anyway. So either way, you probably need to make this adjustment. What it does is really marry up the threshold to say, you know what, there should be very few jobs that meet the job duties test and are below this particular number. But these are the 2 numbers that are going to become particularly important this year in order for some of your employees to remain exempt. So we're going to take a minute in there to take a breath and give you a moment. Feel free to put comments or questions in the chat. We're going to start diving into, so what does this mean for you and what impact does it make? So let me give you an example. If you have a role on your team that today meets the job duties test for an exemption and is within a salary range. So we'll make it easy because it's a super obvious one. You have an accountant on your team, right? You have a true accountant. They have a degree in accounting. They're going to qualify under the job duties test for exemptions. But if that accountant, if you are fortunate enough somehow that you found an accountant making $55,000 a year, today, under the salary test, they would be just fine because they meet the job duties test, you're paying them an annual salary, and they're above the $35,000 threshold. On July 1st, you would be just fine because they're still going to meet the job duties test and they're still going to be over this $43,000 threshold. Come January 1st, though, they will no longer qualify as exempt. And you'll need to make a decision whether or not you want to increase their salary to be over that threshold, or if you want to start paying them overtime. And this is where folks are seeing big potential changes from a budget perspective. Now, again, if your person never works more than 40 hours a week, not a big deal. But most of these roles that qualify for exemptions, there's a good chance that somebody is working more than 40 hours a week, and therefore your overtime costs you have to do the cost benefit as to whether or not they make sense. So somebody asked a question around commission, and we're going to talk about commission because there are situations, Keith, where commission can count towards that base. And there's a portion of commissions that can. There's some situations where commissions cannot. And so we have to really pull that one apart. It's interesting. Many of us have always thought about FLSA as being this like, oh, that's an easy thing we just decide on our own, or that's just a 3-pronged test. The reality is there's a lot of complications. And when we get in and work with clients on compliance, we have to ask a lot of questions to make sure we get this all right and make sure that it's going to work for what they need to accomplish. The good news is with FLSA, there's a lot of ways to get to the right end goal. There is not a one-size-fits-all answer. It's about understanding what your options are and doing cost-benefit analysis of those different options to really come up with the right plan for your organization. It often also impacts more than just the one role, right? Because I have a client, for example, who they have one role that will likely be impacted by this. The easy answer might be just increase the salary for that role and then everybody's fine. The problem with it is they're sitting right now, that role is sitting at 50,000. So they're fine for July, but by January, they would need to bump people to 58,000, which is a big jump. And more importantly, then it's going to cause compression issues with people in the role. It's a feeder role into higher level jobs. And now they're going to have compression issues with other jobs. So we really need to figure out the right answer. In their case, the challenge is that first level job is also a job that travels a lot. And non-exempt employees must be paid for their travel time. So if you decide to pay somebody non-exempt and they travel a bunch, you're talking a different kind of impact to your bottom line. And so there's some nuances to the right answers to all of this that you want to make sure you understand before you just start picking exempt or non-exempt. But this is the piece that's really making the big change for this year. So step one is, right, we start looking at salaries. And I'm sure there's some folks that go, great, I know the number, I'll just go look at salaries. Hopefully you've already gleaned from the conversation so far that it's not that easy. In addition to doing a salary test, you really need to dive deeper to make sure that the rest of the three-pronged test also is applied accurately, because you could be above a salary threshold, but still not qualify to be exempt based on the job duties test. So let me give you a couple of examples. If you have a supervisor role and that person makes $60,000 a year, it would be really easy to immediately say, oh, they're over 60. I don't need to worry about them. The answer is, it actually depends. And here's some of the things that we would be asking as follow-up questions. Because of the job duties test, in order to qualify under the executive exemption, you have to have 2 or more full-time direct reports. So if they are a supervisor, but they only supervise one person, they're not going to qualify under the job duties test. The second part of the executive test is that they have to be responsible for things like discipline, time card approval, hiring, and terminations. So if you have a role that really is more like a team lead role where they're coaching and they're giving direction on work, but somebody else is responsible for making the hiring decisions and the termination decisions, that supervisor is not going to qualify for under the job duties test. And so even though they're making $60,000 a year, they're going to be required to have overtime pay. One of the perfect examples I can think of in this space where we are likely to run into some situations would be restaurant managers. Restaurant managers, oftentimes, right, you might have a shift supervisor who's making $60,000 a year in a restaurant, but they're not actually the one making the hiring decisions or the termination decisions. They're simply managing that shift. Other examples that we could run into in this space would be, I know I've got a lot of folks that are in, a lot of folks are in the landscape space. Some of your foreman level, like first level supervisor roles could run into this space depending. You might be on the borderline with salary, but they're not actually making those hiring decisions, so they wouldn't qualify for the exemption. Now, there's a lot of ways to fix that. Some of it is, how do you structure your roles? What do you make people accountable for? How do you train people to do the right things, right? Or you may decide, you know what, they never work more than 40 hours a week anyway, so let's make them exempt. There's pros and cons to all of the answers. You've got to kind of navigate your way through it. So Casey asked the question of, so they need to have all 4. They have to, in order to qualify, they definitely need to, under the job duties test, they have to be paying paid salary. They have to meet the new threshold. And then for a supervisor level position, yes, they have to have met both this 2 or more direct reports and have the hiring and firing responsibilities as part of it. This is one of those roles that we often see miscategorized today. Right. All right. So another example, office manager. My office manager makes $52,000 a year. So all I need to do is increase their salary by January 1st, right? It's going to depend. And here's some of the things you need to worry about in this case. So office manager is one of these unique roles that could fall under a couple of different job duty exemptions. One of them, if they have 2 or more direct reports, you might be able to put them under their executive exemption, right? If they have, maybe it's an office manager and they have an accounts payable and an accounts receivable person reporting to them, great, they might qualify as a manager and therefore meet that job duty test. Some of our smaller organizations, though, the office manager does not have any direct reports. We use the title manager, but they're not actually managing people. In that case, we would look to see if the administrative exemption applies. And the administrative exemption is where everybody goes, oh, of course it does, because office managers are administrative. Incorrect. The term administrative exemption is extremely misleading in the FLSA law. In FLSA world, administrative means that the individual exercises discretion and independent judgment with matters of significance. And FLSA does not believe that doing accounts payable and accounts receivable only are matters of significance. They do not believe that answering phones and doing customer service, they are important roles, but they are not matters of significance under FLSA rulings. And so for an office manager role to meet this job duties test, it really needs to be an office manager role where they have responsibility for things like maybe budgeting, or maybe they are doing full cycle accounting versus just they're just doing AR and AP, meaning maybe they have some responsibility for the financial statements. Maybe they have responsibility on the HR side, not just for the coordination of filling out the forms and sending into the carrier, but instead actual decisions on employee relations outcomes, hiring and firing, and decisions along the way. Those are the kinds of tests that we need to apply. So when we evaluate an office manager role, we never just take the job title. You actually need to dive down and write a job description and understand what percentage of this person's time. It doesn't mean they can't also do administrative things, but you need to have at least the majority of their time spent on things that the FLSA deems as matters of significance. And so this, again, is one of those titles that as we're coming up on these changes, this salary test is going to be particularly important, but it's also very possible that somebody could meet the salary test, but maybe have been misapplied all along from a job duties perspective. We always start with the assumption that an office manager is more likely not to reach that job duties test than the fact that they are. It is rare that it's really special office manager roles that end up actually qualifying under the job duties test. So you want to make sure you've taken a look at these. We've got another question. Feel free to put questions in there. I'm happy to answer them as we go. Divided by 12, divided by 2, multiplied. Kelly, that is the most complicated calculation of overtime I've ever seen. I actually, because I can't read that fast enough, Kelly, let me take that offline. And Nicole, if you can copy and paste that, Kelly, I'll follow up with you afterwards. The good news is divided by, multiplied by overtime equaling the hours. You would want to do the math, Kelly, and make sure that the overtime pay has to be at minimum 1.5 times their hourly rate. So if you do that math and figure out if you pay more than that, you are more than welcome to pay more than that. If you pay less than that, it's problematic. Now, some people do pay folks salary non-exempt, so meaning you still get a base salary, but if you work more than 40 hours, we're going to pay you for those extra hours, and that is okay. It's just a little bit more complicated to explain to people, but it's not a bad option. In fact, it's one of the suggestions we make sometimes for the right clients. So that is a great question. If the office manager is also part owner, Keith, in that case, we will need to look at what percentage of their time is their work being owner and what percentage of their time is their work being the employee. Typically, the owner status, if we can show that they meet the highly compensated employee number as an overall number, then there's a way to get them considered that we can still get them in there as exempt versus non-exempt. So we'll have to dive a little bit deeper on the budget, Keith, and figure out how that's going to play in. It's a great question, though. Fantastic. All right. So let's go into our third question, my favorite one, HR, right? Because this is one where my HR person can mean a lot of things. In some corporate settings, HR is almost always an exempt position. But then in smaller businesses, we may call somebody our HR person, but they're not really going to meet that job duties task. So in this example, right, we've got an HR person making $52,000 a year. Do we just raise them to 58,000? The answer is it depends, and it depends on whether or not they meet the job duties test for HR. So this is the administrative exemption. HR can fall under the administrative exemption, but it depends on the type of work that the HR person is doing. So if they spend the majority of their time doing what the FLSA deems complex HR work, and complex versus HR admin. So FLSA considers HR admin work to be things like they run your payroll, they do your benefits enrollment, they maybe do orientations, they might do recruiting work, but they're not really part of the decision-making process in recruiting. They're just reviewing the resumes and then sending them on to managers. They're not in a clear, heavy lift in the decision-making process. Then they're not likely to meet that administrative exemption under FLSA. If majority of their work, however, though, is complex, and in FLSA world, what do we mean as complex HR? This is the role, these are the roles where they're doing employee relations issues, they're selecting benefit plans, perhaps, they're making selection decisions on hiring, right? They're truly involved day to day at levels of work that typically would require a degree, an education, a certification, or some significant experience in HR. Then HR is covered under the FLSA experience. So perfect example, my team is the easiest example of this. We have different levels of consultants on our team. We have an HR coordinator who helps support our clients when there's administrative needs, basic recruiting work, benefit enrollment. She does orientations, she does exit interviews. That HR coordinator role, even if they are above the new threshold, that HR coordinator role on our team will always need to be a non-exempt position, and I'll need to pay overtime if she goes over 40 hours. It's not going to qualify under this administrative exemption. One level up, however, where I have a recruiter who is very much part of the hiring process, leading client conversations, working independently from beginning to end on their work, that role is going to qualify under this. As long as they're over the salary range, they would qualify under that HR exemption. So roles like marketing and HR can often fall under this administrative exemption, but it really depends on the type of work that somebody is doing. And so we're really trying to get out in front of employers to say, yes, you need to understand the impact of this salary threshold. And for some of you, the salary threshold will be complicated enough because you might have compression issues or other problems you need to solve. But we really want to make sure people understand it's not just the salary. You really need to peel back all of the parts of the role to make sure that you get these things classified correctly going forward. And so we decided to pull out some of the ones that are the most common. So again, I know I've got a lot of landscape folks, so I pulled out one of them. The account manager position is one of the big questions, right? So if you have an account manager position that pays $50,000 plus commission, will you have to pay overtime as of January 1st if you don't raise their salary? And I hate to tell you this because you're going to think I'm a lawyer, but I promise I am not. But the answer is it's going to depend. And we're really going to have to look at how is the role constructed, because while the job title account manager in landscape, it gets used over and over and over again, I can tell you from our clients, it's really hard to pull a job title of account manager for 2 clients and actually use the same job description because it means such a different thing. And so here's some of the questions we would be asking in this situation to decide what needed to be done. First of all, there is an exemption for individuals with a position that qualifies as an outside sales position. And in the outside sales exemption is so broad that the base salary does not matter at all. So you could have an outside salesperson that's paid 100% commission, but if they qualify under that job duties test, you would not have to worry, you could keep them exempt. But what does outside sales position actually mean is the really important part. So first of all, being in an outside sales role needs to mean that this individual spends the largest portion of their time selling to your clients. So if your account manager is mostly customer service and they're not doing enhancement sales or new sales of maintenance, your account manager job may not qualify under this outside sales exemption. If they do, we're good. If they don't, and your account manager is really more of a customer service type role, then we need to look at some of the other exemption options and or look at how is their commission, what portion of their commission can be counted towards this threshold. And that depends on your commission and your bonus plan and how it's structured. And so we really need to pull it all apart and figure out whether or not for every company, whether or not that account manager is going to be safe or not. Because a lot of account managers right now, I can tell you in our market, we're seeing our account managers sitting right between about $55,000 and $65,000. So this is going to be a really critical role in the landscape space. And so these 3 questions are the things that you need to think about. And you need to think about it not in terms of the person, but in terms of the job. So you want to make sure the job description reflects the right FLSA status. And if you have 2 people with the same job title, but they do the role very differently, we might think about actually making them 2 different job titles and having 2 different job descriptions. So great question from Kevin around how is an audit triggered? So an audit can be triggered several different ways. Sometimes an audit is triggered if an employee goes directly to the Department of Labor and says, I should be getting overtime and I'm not. An audit can also sometimes be triggered as simple as a byproduct of an unemployment claim. So in the process of an unemployment claim, the unemployment office is looking at things and says, well, how much were you getting paid in overtime? And the person says, well, I don't get overtime, I'm salary. And the unemployment office goes, well, that's a problem. And then the unemployment office says something to the Department of Labor, and then the Department of Labor causes you an FLSA audit. Sometimes it can be caught as part of a class action lawsuit. You have a bunch of employees that come together and say, this happened when I was at Progressive Insurance. All the employees across the insurance industry got together and said, the entry-level claims rule should not be, it was always exempt. You didn't get paid overtime. They got together and said, the entire industry has misclassified this role. And every single company in the industry, when the court finding was, you are correct, it's been misclassified, every company in the insurance industry had to A, pay, and B, make changes going forward. So there's a lot of triggers. Sometimes it gets triggered. You have an employee who, if I've had situations where it will get triggered because somebody is disgruntled about something else, and in the process of that investigation, we become aware that there's an issue, and in that awareness becomes, the Department of Labor becomes aware of it and starts to challenge. Also, the Department of Labor has every right to just come in and audit for the sake of it. So there are a lot of different ways that this can happen. Best way to protect yourself, Kevin, I love that. First and foremost is make sure you're doing audits regularly. Make sure you're classifying people appropriately and don't guess. There are a lot of ins and outs to these exemptions. Make sure that somebody else has looked at it, and then make sure, most importantly, you have job descriptions, and the job descriptions state the FLSA status And we actually, even if it's one that's on the fence, we will actually create a document trail that explains, here's why we determined that that this was an exempt position, so that at least there's a track record that you tried to get it right. Courts may come back and say you got it wrong, or they've changed a rule, but at least you would be able to know, they know you tried to get it correct. So several of you are probably thinking, what are all these job duty tests and what do I need to worry about? I am not going to go through these one by one, because quite honestly, some of you would be crying by the end of the time we got done. But if you have questions on them, know you can always call us to ask those. But there are 7 different categories. My number one thing is, don't be fooled by the title of the job duties test, right? Administrative does not mean admin assistant. In fact, almost never does an admin assistant qualify under the administrative job duties test. It's one that is often misapplied. Professional is the one that lots of employees hold on to. I'm a professional, so I'm exempt. Professional actually means you have a degree in an area of science, and that's it. That's as far as it goes. But I will hear people who apply their accountants or lots of other things under it. So a lot of different pieces here you need to understand. Don't go at it alone. Make sure you ask questions if you're at all unclear. Computer employees, we've got some clients on that are in the computer industry. Computer employee is not a blanket exemption. An entry-level help desk person under FLSA law does not qualify as an exempt employee and needs to be paid hourly. In fact, the courts ruled on it as an industry ruling. So those are some things, again, don't just take the words and think you've got all of the applications. So how do you avoid errors? First and foremost, don't make assumptions. Read if you need to, if you're a Google expert and you want to Google, there's FLSA fact sheets out there on every single one of the exemptions. It'll give you the details, not the most thrilling and exciting reads, by the way, but you can find that information directly from the Department of Labor, right? Go directly to the source or find an expert to do it for you. Always go beyond the job title and think about what is the role actually doing. And this is where job descriptions that aren't just a list of the 100 job duties, but instead, here are the top 3 to 5 priorities for the role, and the percentage of time that somebody spends doing it becomes so important. And then make sure you've gone through the job duties test. And once you've done that, make sure you keep accurate job descriptions so that you do have something to fall back onto if you're ever questioned about your FLSA status. Your best defense is a good job description. So what do you do now that you go, oh no, I think I've got folks that are going to be either are already out of compliance or are about to be based on the changes? There's a couple of different ways to address this change in terms of compliance. And one is, if it's just a salary threshold piece, and it's a couple of $1,000, raise your salary, right? You probably need to anyway. If you started looking external to the market rates have gone up so much that if it's somebody that's been there a long time, pretty good chance you probably just need to pay more in general. And even if you don't need to, there's a good chance that you might need to by the time this goes in effect, because a lot of companies will just increase salaries. But it's not necessarily that easy. Sometimes we have clients that, right, if somebody's sitting at 50,000, the jump to 58 is big. And so you say, you know what, if you work overtime, I'm willing to pay you overtime for those hours. It's not a bad way to go, particularly because you can control how much overtime somebody works, right? You can tell them, look, I don't expect you to work overtime. And if you do, I want you to make sure you get my approval in advance. There is nothing wrong with that at all. It's absolutely well within your rights as an employer. The other piece, though, that you might need to do is restructure a position to make sure it meets the job duties test. Maybe look at your org structure. If you have a position that is going to require somebody to work a lot of overtime, that's going to be really expensive. Maybe you do a combination of make sure they're hitting the salary threshold, but also maybe, right, maybe they become more sales, less customer service. Maybe you rearrange job duties and assignments to make sure, right, maybe you elevate an HR coordinator to an HR generalist, not just in title, but in actuality of where they're spending their time and how much independent judgment they exercise in that particular role. That's a perfectly acceptable outcome. and often is a way that individuals will help come together and get an alignment with the FLSA standards. The other option, if you decide not to go, if you want to, if you know that this person needs to be non-exempt, a lot of times people, this is not an easy thing to message to folks, just so you know. If somebody's always been exempt, there's a lot of ego that goes along with that. And it is a point of pride for folks, because for years people thought, oh, professionals get paid salary and don't have to worry about overtime. So I've told employees before, right, you're going to get all this extra money in overtime, and they're still super, super mad, like super, super mad that we're making them non-exempt. It is a point of personal pride. So do not underestimate the communication plan in this case, because inevitably somebody on your team will be highly offended that you did not think that they were professional enough, even though it has nothing to do with that. So one of the options that we have done, also some people like the flexibility of salary, right? Somebody has never filled out time cards before, and they're not really working much overtime anyway, but they don't, if they want to leave an hour early on Friday, they don't want to feel like they're getting docked or have to use PTO. There is a way to have a role be salaried, but still be non-exempt, where you pay them at the salary rate, and it works just fine for flexibility. But if they go over, you still have to track hours. And if they go over 40 hours, you absolutely have to pay them overtime. So just a couple of the things to think about. Again, I guarantee as we take our clients through this, and as we work through this with a lot of folks over the next 8 months, there's probably not going to be very many that are like exactly the same. There's a lot of considerations that have to go into not only what you do, but how you communicate it to your team. A couple of other things to think about from an implications perspective as you're making this change. It's more than just, do I pay somebody overtime or not? There's things you need to look at. Many of you have determined your PTO policies are different for your exempt versus your non-exempt employees. That's the case. You may want to rethink that, because you might end up moving somebody's FLSA status and they could lose PTO accruals, which again would make people very unhappy. Some of your benefit options are aligned with exempt and non-exempt. You'll want to check your benefit plans and make sure. We always suggest do not align necessarily your benefit plans with exemption status, because that's really about the role, not about whether or not they should be eligible. There's other ways to determine that isn't tied directly to FLSA status. You also have to think about, how are you going to make time tracking easy and unobtrusive in your work environment? Especially if you have people who have never done time tracking before, and now they're going to be non-exempt, and you need to have written you have some written proof of the hours people have worked. Just saying, oh, I paid them when they worked overtime is not enough. You have to be able to show that they did not work overtime, or you will get fined based on the government's estimate of how much overtime they worked. Not a fun number. So you need to find ways to make time tracking easy and unobtrusive. If you don't already have an electronic time tracking system of some sorts, now is the time to start thinking about a good HRIS system. It can be done on a budget, but super important to making this easy. And then the last piece you want to do is think about, are there other policies or practices that are based on FLSA status? One of the things that we're doing for our clients today is we're already going through their employee handbooks to say, how many times did you use the word exempt and non-exempt? And are they in the places where they really should matter? Or do you have policies that are one way for one group of employees and another way for another? And maybe we should get rid of those. Are there practices on a day-to-day basis around flexibility of coming and going and culturally that make a difference? And if so, how do we start to break down those barriers? Now, as you're thinking about all of this, I can already hear the wheels spinning, right? Right along with, well, how would somebody know? The next question is, and how much would it cost me if I am wrong, right? So if you are found to be out of compliance with FLSA, you have to pay back pay for the overtime that should have been paid, and you have to pay interest on that back pay. It gets pricey fast, especially if you're talking more than one role. If it's deemed that you willfully violated FLSA, so you knew you were wrong and you did it anyway, it's an additional $10,000 and up to $1,100 per violation, which means not per role, but per person in the role. So it's really important that you get this right. And particularly if you know you're not doing it right, now is the time to correct it. The great part about particularly the job duties test is if you correct it now in compliance with the new laws, right, it's not likely to trigger notifications. When you change FLSA statuses on a job mid-year, it can sometimes cause people to raise an eyebrow. So we usually suggest, trying to time it with, hey, get in compliance now that the law is coming. And I will tell you, if the willfulness is particularly relevant and at a high level, the law does say you could go to prison for this one. So I don't suggest compliance, and particularly not willful compliance. Make sure you find out what's going on. Most importantly, I will tell you, most of FLSA is about your culture ramifications, right? When we just say, I know the law's out there, and I don't know about you all, but the morning after this got announced, it was all over our local news. I know it was on all of the national news channels last week as well. When people know you're not complying with the law, it starts to create turnover issues. It's definitely going to start creating issues on your market rates, because this will have an impact on just compensation in general. People start to disengage, because if you don't care, why should they? And most importantly, union campaigns is something to be particularly important of. I was just attending a session last week with an attorney that specializes in NLRB law, National Labor Relations law, and he was actually indicating that first of all, union rules are changing dramatically, and they are shifting in a way that makes it much easier for a union to come into a non-union environment. And because of that, a lot of these unions are targeting industries that have not historically been union industries, because they're a little bit ripe for the picking and they're not following some of these types of laws. And that's the reason, that's the tool that they have to catch employees' attention is, if your employer is not going to take care of you, we will. And so don't open yourself up to union laws and union campaigns. Make sure, even if you go, oh, my industry is not a union industry, take a look. Starbucks would have told you that a long time ago, and they are now becoming union environments. So it's really important that you get this right. So the big question is, what do you do from here, right? There's a few of you who are probably sitting back going, oh my gosh, that's a lot. And where do I even start? The first thing you want to do is look at your salary test. Absolutely. That's the piece that's changing, and you need to go through and apply. What does this new salary threshold have it change in terms of my current staff? Then you want to go back and review your job duties tests. Then you want to figure out, what's my strategy if a role is not in compliance under the new threshold and or not in compliance because of their current job duties. Now you need to get a strategy put together. What's the right answer? Do you raise the salary? Do you change the job structure? Do you just go ahead and pay the overtime? What's the implications to all of this other stuff, right? Then you've got to create a change management plan. This is the one that often gets overlooked in this, and I am not kidding you. I had an employee who called me back 3 times in the process of the change management communication, arguing with me that they should not be eligible for overtime. And even when I said, do you understand you will make more money? They still argued with me because they found it offensive to be paid as a non-exempt employee. So don't ever underestimate the importance of getting this communication right. And then update your job descriptions. Now, oh, and don't forget about your HR policies and your benefit plans and all of those different items that I talked about that you want to double check. Now, a few of you may be walking away at this point going, oh my gosh, I don't know where to start. I don't have time for this, and I don't want to have to be the one to figure this out. Do not fear. First of all, for those of you that are currently on our HR director program, we've got you. We do all of this for you. We've already sent out the communication to say, hey, tell us when you want to get on our schedule. We will handle this for you from beginning to end for those of you who are already on our HR packages. For those of you who are not, knowing that this is super overwhelming, we are offering a one-time FLSA expert option to take this off of your plate, either because you just don't want to have to learn it and think about it, or you got some issues and you're not sure how to solve them, or you're just hoping somebody makes this a whole lot easier and you don't have to spend any time on your day. Under our FLSA expert package, what we will do is we will do the FLSA audit for you. So we will go through and apply the salary test and the job duties test, all of those things. We will make recommendations for you on where you're out of compliance and what to do to get into compliance. We'll also do the review of those policies and practices and make sure that this is all going to work seamlessly. We write the communication plan for you down to the script. We literally hand you a piece of paper and say, practice this. And here's the kinds of questions you'll get. And here's who I think is probably going to be most concerned. And here's how you address their questions. And then we support you through that transition to make sure that this is the easiest thing you've had to handle this year, not the most challenging thing you have to handle this year. To give you an idea on again, we're doing special pricing through the end of May. We want to get ahead of this and get everybody, even if you don't think you need to make the July 1st change, you're better off to have the plan so you can start building this into your budget for 2025 because you'll have people that are impacted then. You may also want to think about making small increases to people's salaries to get there versus like dropping it on them all at once. So we would strongly suggest people get ahead of even the January date early and ahead of time. So it's based on the number of employees you have because we have to do the audit for all of the different roles. But we are offering this as a one-time package through May 31st. And all you have to do is email us at hr@peoplesolutioncenter.com. Put in the code FLSA expert. Nicole, our sales and onboarding coordinator for People Solution Center, will reach out and get you set up. The great part about the way we position this is not only will we solve all of your FLSA worries and woes, but you also will get a free HR strategy session from that, where we will also give you an idea of here's just in general some things you need to be thinking about on the HR side over the next 1 to 3 years. So we'll spend a lot of one-on-one time reviewing your handbook, your job descriptions, those types of things, and writing that roadmap for you for where you go from here. So we are so happy to be resources to you all. If you have questions as follow-up, please don't hesitate to reach out. Kelly, I'm going to reach out with your questions specifically and make sure that I get that taken care of. But if you do have follow-up questions, just reach out and ask. Know that we are here to be your experts as we go through this, and you don't have to spend the time and energy trying to weather this alone or researching it as you go. So we so appreciate you all joining us today. Please don't hesitate if you need anything additional, and have a wonderful Monday afternoon. I hope this was helpful. If you do have questions, I will stay on. Feel free to drop those in the chat and we'll answer those as we go as well.